Well, welcome everyone. Hope you all had a fantastic week last week. I hope you are having a good trading day today and a good day as well. So those of you that have done some trades, remember, we don't care if they're funded or non-funded. As far as I'm concerned, they're all non-funded. This for examples. Talk to me. Tell me what you guys have been doing. How's today going as a trading day? Drop it in the chat box and I will share with everyone else. But keep in mind that everything we talk about, everything we discuss here today is all for educational purposes only. Nothing we do here is meant to be advice and or recommendations. You should never take any trade on that you pick or anybody picks that does not fit your own personal risk profile and risk tolerance. Excellent. All right. Power hour on Amazon today, Roman said. Didn't see it, Roman, no. There you go, Robert. Okay. So guys, you got Patterns in a Flash coming up on February 3rd. That is a bonus for those that are in Tony's Patterns in a Flash program. Got Trading You coming up on Feb 4th. That is, and the next one after that is the 10th. Inner Circle is coming up on February 18th. Monster Market Movers on the 25th. And then we've got this week, Power Option Plays, Covered Call Explorer, E-mini Think Tank are all on their regular schedule. The free workshops, Power Hour, here we are back. It's good to see you guys back in action again. I see a bunch of brand new names that I have not seen before. So welcome for those of you that are newer. And welcome for those that are back. Key to Be Free, I taught it this weekend, crushing. It was absolutely outstanding. I've never done an event on a Sunday before. Man, it was hype. It was awesome. I loved it. January 27th, which is coming up this week, Wednesday. Brandon's doing both 12 p.m. and 8 p.m. Trouble with the Trend. We are getting near capacity in some of those, in one of those rooms. So make sure you guys, A, get in there, get registered, and B, show up early to make sure you get in. All right, Mastermind Group on Tuesday. Here's the Follow Us page. We've got, as I said last week, we are about to add our podcast in there. We're settling on the network this week and getting all of that set up, and we should be releasing the podcast the week after. So you'll see that on here. It'll come through an RSS feed, so you can have it automatically show up on your phone. You get notifications from it, all that great stuff. Good, Sarah. I'm glad you enjoyed it. Thank you. Let's see. All right. I think that is it. Okay. So let's go ahead and jump into the charts. All right, we'll go over here first. Let me bring us back over. Nice reversal today. Let's see. Let's go over and look at the S&P 500, the SPX. All right. So the Dow is down 180 and the NASDAQ is up 44. That's doubled since we started here because it was only up 20. It was up much higher before. The S&P is down only 5.5. It was down much further than that earlier today. So it's had a phenomenal recovery throughout the course of the day, right? So good bounce in there. You know, but we need to go and look at what the markets themselves look like. And what I mean by that is, what is the S&P doing right now? No, that's not what I mean. What I mean is, what does the S&P daily chart look like right now, right? So this is, you see my green light on here. So on my trade nav, we have the intraday is on. So I'm able to see what's happening today. You can see where we opened right at the Fib. It's a here kitty kitty all over again, right? If that the 8 moving average was further down, it would have been a great setup, great for a day trade. Well, a little bit too tight there with that, but it went line to line, right? And that strong level of that 3803 down to 3800. I don't have a blue zone in there, right? Because it's just too tight. It'll disappear. Watch. And I talked about this in Pop. If I go and put this blue zone in there, right there it is. Let's go ahead and, I mean, you can hardly see it. It just hides it, right? Or it is hidden, I should say. But you can see into that blue zone, we took a nice bounce. Overall, big picture, what's happening? We're moving to the upside. That's big picture, right? Very nice, very steady function. Am I worried about the breakthrough today? No, because what you need to do, what you need to make sure of is how is it breaking through today versus blah, blah, how it has broken through in the past. What do you mean? Well, we pierced through today. We came down to a very key level with a confluence happening right there, and we got a bounce. Okay, beautiful. Now what? hold on a second. Hold on. I may not have the right line in there. That's why I don't like drawing them that small. It's just too tight. All right, so actually it's okay. I just want to make sure I had this line here and not that this Fibit, that blue line here is from a Fibit, that the Fibit might have been off. It needed to be drawn off of the red line, not the blue line. Okay, so rewind. When we pierced through today, it kicked off a key level, right? Or triggered right off of that, pushed back up. But when we go back and look, it's broken the 8, moved down as far as the 21, didn't close below, and it came above. The last, and here's what I want you to look at. Let me grab my tools. Everything is all over the place here. All right, that goes there. I got everything all messed up from this Sunday event, just trying to find where I moved things on my screen. All right, perfect. So when we came down here and we broke through on this candle, we were still down below, right? Then you look back at the next, what I would call an attempt at the breakthrough. I'm not looking at each candle as an individual candle per se. All 3 of these are the same attempt. Is it going to hold the support? We broke through the first one. We broke through the 8 on the second one. We were back down below it on the third one, right? All of this, we had maintained in there with that one candle that the wick stretched down a little bit further here, right? And then we go back and see this is another occurrence. This is another occurrence. Every time it's happened, even to the point of the wick breaking the 21 here and here, it's happened before. So based on that, you can look at this and say, okay, the S&P 500 has a history recently to break the 8 and then come in and make a recovery from there. And then you can go ahead and take, as an example, you can pull the clusters of where we broke through, right, further back historically. Right, where are we? Get my mouse back again. There we go. You know, when you look at this cluster right here, now you can start analyzing, was there a trigger that repeated itself where I should have considered an entry? A break above the 8, a retest and a bounce, a fib or fibit level, 100-point level, moving average, whatever it is there a reason or a significant reason for me to look at this and say, when this happens, it's a repeatable, that's the word I'm looking for, not significant. It's repeatable. When this happens, a trade should be triggered. Now, it is the S&P 500. You can look to this for the SPY. You can still trade options here. You just have to look at it from the standpoint of, is it doing what it's supposed to do? Right now, it's doing what it's supposed to do. Historically, it breaks down below the 8 and gets above the 21. And when I say historically, how historically? Well, all right, what are we doing? Okay. So let's see, too much time. So you can see as we crossed up, right in here on this entire run, it has worked, right? When we go back here, maybe not so much, right? We don't have as much history here that says, oh, I like this, right? Doesn't align itself properly at all right? So Jim said, SPY doing great, caught some of the down move, then caught some of the up move, profits on all. There you go. I love it. I love it. Monday mornings are normally covered day for me. So I'm looking at my covered positions that I already have. Maybe I didn't close a position out over the weekend and I need to write my next one, or a new position I want to initiate on a covered call, diagonal, naked put. That's normally my normal Monday morning is that, right? So I did initiate one new position today only. You guys have seen it in here before, and it's paper trade, of course, but I did initiate one new position today. All of the other covered call stuff is doing phenomenal. I'm stoked. Is anybody doing any iron condors? Just don't worry about twos. Just give me a 1 for yes if you're doing iron condors in the market now, in this market condition. I talked about this in our inner circle the other night. Good, Barry. You need to be looking at it. Right? Russell 2000 is doing, great market for him. Great market for him. So S&P is up nicely today. overall, big pictures are doing good. When you look at a weekly chart, we're rocking. We're doing fine on a weekly position, right? We need to go back here and identify this as this chart only. Show for all S&P. Nope. Okay, there we go. Perfect. Dangerous though, since IWM and SPY are rising. Well, so I'm doing them on the actual RUT itself, the RUT. So I'm a couple of 100 points out of the money, Barry, based on the rules that I teach in Mastermind and Inner Circle. I'm a couple of 100 points away from it. So overall, we should be okay. And if not, we'll manage it. It's okay. I mean, my goal on this trade is somewhere between 1 to 2. Occasionally, you'll get 3 times a year this trade goes against you. If you just follow the rules on the RUT, which is the main symbol we do it on. If you follow the rules on the RUT, there's a higher probability. And actually, I'll give you an example. For those of you that are unfamiliar with the Iron Condor, it's basically 2 credit spreads, right? And the example I was getting at of where we're at, the positions that I wrote, basically, I have a 7% chance of being wrong on the trade. 7%. I am okay with a 93% chance of being right and a 7% chance of being wrong. Right? I'm good with those numbers. But you are right, Barry. If you're doing SPY, IWM, we are rising, right? But I do it on the indexes themselves. What's 93 delta, Robert? Okay. Yeah, 7 delta. Got it. Okay, yeah. Exactly. 93% chance of being right. Exactly. 7 delta. Yep. That's exactly it. Right? And we're doing them as married positions. Here, I'll give you an example. Let's see. All right. I don't know why. Oh, looks like we got bad data in here. Bad tick kicked in today. So I'm going to take off the intraday chart until that gets fixed. All right, that's a mo better. Right? That's where I'm at right now, folks. I have got a lot of room. When I did this, I was 800 points apart. 800 points of swing is what I have on this position. All right? So there's a lot of opportunity on this trade. If it goes against me, there are management techniques. There are ways of being right in the trade. There are ways of making more. I love this. The best thing about this trade is now you got to listen closely. If you really screw it up, you can make a lot more money. If you screw it up just a little bit, you won't. You'll lose money, right? Or it'll cost you money. But if you really blow it big time, you can actually make more money on this. So we actually hope it goes really bad against us sometimes. Actually, I don't hope that ever, right? That's what it would be. All right, so, and only very few of you put in that you were trading iron condors at all. Hopefully you guys decide to take a look at them. As long as the market is not chopping all over the place, so you got a slide up channel going on here. We're going sideways now for the last 4, 5, 6, 7 days, whatever it is. I love it. That's a beautiful thing for this market, for this position. Beautiful thing. All right, let me go back to, so let's go look at Amazon. Let's go to our 5-minute chart. Oh, I got a camera here. I thought I turned it on already. There we go. Whoop, there it is. All right, so look at Amazon. Talk to me. What do you see? Come on, traders. What do you see? What is going on? Take note of the chart. What do you want to be looking at? Yes, Rick, exactly. It's probably not in the right place, but exactly. Good, Amos. For sure, Brenda. Absolutely. We definitely want to be looking at that side of trading it to the downside using puts. Yep. Good, PK. Excellent. I'm looking for something other than the option type. You all right? Bearish. Right, there you go, Jim. You got it. That's the main one I'm looking for. There's a second one. Okay, Roman, that was the third one. The gap fill was the third one. Good. You're the first one to get that. Good, Brendan. You got the pattern. Right, but what's happening right now? We had a close below the 8. We had a retest, and we're looking at a fail. Right? There's a potential opportunity right now as we've been talking here. Look what's happened with Amazon. I mean, what has it moved? $5, $6 since we started talking? Maybe $8 or $9 now. Right? Good. Those of you that said the H pattern, exactly, that is what my primary focus of what I was trying to get from you was. We draw the Fibonacci from where the run started, up here, down to here, and then let's look at what happens. If I, just a little bit more, okay, perfect. Just wanted to zoom in a little bit on it. And let's see, drawing tools, come on. Beautiful, let's use white. All right, so here's our V top, right? Here is our bottom, there's our bounce, right? Now, if you get rid of the V top portion of it, and some of you may be sitting there saying, scratching your head saying, you say an H pattern, I don't really see it. So I realize if you look, go back to grammar school and you use your 2 lines in there, and that's what your H looks like, a lowercase h, right? And yes, I'm drawing with a mouse, so it's as best I'm going to get it, right? The best as it can be. But now watch here. That's an H. Now, some of you sitting there saying, Rob, that is one ugly letter, one ugly H. You may consider it to be ugly. To me, it is the prettiest letter in the alphabet. The H is screaming out to you to take this trade, all right? And with a confluence, now we didn't get all the way up to the 50 or the 618, and that's what I was saying to Rick, because he had called out H, and I said, I don't think it went up high enough, meaning I didn't think we moved all the way up, but I could see the pattern setting up. But more importantly now, look, from when we talked, for those of you that are sitting here saying, day trading doesn't work, do we really need to worry about it? Or those that are questioning the rules that I use in there, right? Look at what happened. Now, you see where I drew the Fibonacci from? This swing high right on the top there, right? Down to that very lowest low we had today. If we zoom in on this candle, which is the candle we were talking about, we opened up at 32.85, let's call it 32.85. We closed here at the same thing, 32.85, a few pennies difference from one to the other. And we failed, and look where the moving average was. So we opened up, we moved down. So let's say that you got in at 80. If it took you to 80 to get in. This thing went down to a low of 32.7187. Look at the Fibonacci level on the far right, 32.7182, and I'm talking about 32.7187. 5 cents difference it missed this by. And when I talked about that break before I started drawing the fibs, and I talked about the moving averages, the fibs weren't there for me to say, oh, I see the lines. But guys, look what happens when we combined that moving average and that Fibonacci on the chart. Home run. Absolute home run. Money in the bank. There you go, Amos. Money in the bank. All right, Larry said, is that the normal way of using fibs on intraday charts? Oh, absolutely, Larry. For drawing them, there's nothing. So when we say normal, let's be clear about something. Normal says I'm looking for the largest move closest to the right side of the chart. I am very hyper focused on what's going on right now today. All right, nothing like going through a coughing attack on a video camera, right? So if this was not today, Larry, let's say this was yesterday. If I grab a pen here, and let's say that, this candle, today is where right now the start of today is here. Okay, let's say the start of today was here, Larry. So this was yesterday. This was, Friday's close was here. and we just had a continuation move down, then yes, I certainly would use this high, even though it came in from Friday. I would definitely use the high up there. Where's Larry? Does that make sense? There you go, PK. I love it. I love it. PK said, as soon as you mentioned it, I took one put and got it, and when it hit the fib for $240. There you go. Great job. Good paper trade. Awesome. Whether paper funded doesn't make a difference, right? So, but good job. You saw the opportunity and you capitalized on it. Barry said, I'm missing something. Take a down trade on an up day. Yes, but it's really not an up day, Barry. We're down today. I mean, we gapped up, but we failed. I mean, we broke through. Here's yesterday's close, or Friday's close, right down here. So we're down below that. We're down below our moving averages. But remember, Barry, so in power option plays, as an example, when I call out a trade and say, go ahead, we're going to take a day trade. That day trade doesn't say only take a bullish trade or only take a bearish trade. We're looking for clear and concise entries. That's exactly what we want to see. If I can get the clear and concise entry, I'm all over it. I'm all over it. Now, would I prefer to have it in the direction of the market? Absolutely. If you are a newer trader, should you be doing it only in the direction of the market? Yes. Yes. Don't fight the overall market. Not until you learn the how. There's a whole different set of rules when you are counter trend trading than when you're trading with the trend. When you have a 70 to 80% chance of being right, just because you're trading in the direction of the market, why would you not just follow the market as a newer trader? Okay, let's see. But Barry, does that make sense? Did that answer the question for you? Kyle said, does an H pattern mean the price is going up or down? The answer is yes, Kyle. And I don't mean that in a nasty way or a wise guy way. Watch. Let me hit clear. So what direction, and this is the way to look at it, Kyle. What direction is the market moving in? Right now, we've got a bearish move. That's the way we're looking for the H pattern. If I had an inverted move, in other words, if the market were moving up, let's go, instead of me trying to find something, let's just go here. If I go over to Apple, and let's bring it back out. All right, so Apple had let's do this. Let's go over to a template without any moving averages on it. All right, perfect. And I will get my drawing tool again. Let's change colors though, since you're not going to see that. So now this one is a little bit different, right? This one was a bullish move, the initial move. And what happened? We moved back down into that 618. And how does the move lay out for us then? Right? Here's the H now. It's upside down. It's an upside down H. Right? So, Kyle, does that make sense? Depending on the direction of the market is dependent upon where we see it going up or down. In the original one that we looked at with Amazon, we were looking for a bearish move on that. Cool. All right. All right. So back to Barry. Said only half clear when you say market, SPY, Dow, or this stock. So, all right. I'm not really sure where you're referring back to that, Barry. If you mean when I talk about 70 to 80% of all trades tend to move in the direction of the market. When I say market, the word market always means S&P 500, at least out of my mouth. It always means that, and it should out of a trader's mouth, mean S&P 500. So yes, on the S&P 500, if I am following along with the overall pattern, and if we clear this off, and where are we, Apple? And let's go over to template number 2. Perfect. All right, we'll zoom in a little bit. Okay. So if you look at the overall pattern here, Barry, this is bullish. This is the S&P 500. This is bullish. Point being, you are better served only taking bullish trades when the S&P 500 is in a bullish market, bullish bias. Did that answer it that way, Barry? All right, so Kimberly said, yes, good. All right, Kimberly said, can you explain the second candle was not an entry for the 33.44 level? So I think we're talking, Kimberly, sorry, I didn't catch it when you first put it in, but I think we're talking about Amazon, right? Amazon, okay. So the 33.44 level, so you're talking up in here, right? You're talking about the trade that we would have made coming out of power option plays for taking a bearish trade here. Is that what you're referencing? Right? It broke down, came back and retested and failed. Because that's what you're talking about, that level. I just want to make sure we're talking the same thing. What's bringing that point up to you, right? I already put it back away to try to clean my desk off. I should know better and just keep it out. My tracking sheet from Pop. Right. So on Amazon, we're bullish, right? And let me do it this way. Let's go and clear this off. So back to a mouse, and let's go here. Okay. So on Amazon, we are in a bullish bias, and we have the intraday shut off. Good. So let's see. Just want you to see the whole fib. You can see how horrible Amazon has been. It just lackadaisical, lazy, sideways, ugly, yuck, right? But now let's zoom in on a little bit. So this was where we sat now, all right? And we opened up, let me turn on the data, the intraday data here. And the note on Amazon was earnings because they're coming out on the 2nd confirmed. So we had the 33.44 level in place, right? Could you have taken a day trade off it? You could have, absolutely, if you got the right trigger at the 33.44.29 level, right, Kimberly? So if we go back to TradeStation, and that level was already snapped in place, we closed right at it, right? We opened slightly up above and broke down, right? Now we did break down on wick the previous candle. I certainly would have preferred this candle to have closed down here instead of closing above or at the 33.44 level. And then the pop up and the breakdown would have been fine. What I would have been looking for, it would not be the Kimberly, are you in power option place? One for yes, two for no works. Yes, okay. All right. So yesterday, and the reason I asked was because of the video I did yesterday. And folks, listen, I'll put a little plug in here. All right. I'm going to tell you right now, if you're not in power option plays, the things that you're missing out on, like yesterday when I went in and said, okay, we've got a lot of earnings candidates today. So let me take a few moments and put a grading system in place to talk to you about your entering of your day trades, giving it an A, a B, or a C, right? A, yes, I should take it. B, maybe. C, probably not, right? This would be that B, Kimberly, right? I love that we closed at it, but I would have preferred to have been in a little bit lower to move up. So what I would have to have done is go to a 1-minute chart, and we're looking at the 10:05 candle. Okay. So we'll go to a 1-minute chart. We'll snap a line for the 33, I think it's 33.44.29. TradeStation is giving me difficulty. 33.44.29 is that? I'm pretty sure that's it. All right. Let's zoom in on it, and we'll back our way up to this morning. And we're looking for 10:05. Now that 10:05, right, here's the 9:31 candle, right? That's the closing time. So 10:05, that's the closing time. So what would I have seen? That would have been this candle, 1, 2, 3, 4, 5, back to here. So basically, we're looking at these 5 candles right in there. make up the 5-minute chart. So what I would have been looking for, Kimberly, for me to take this trade as a bearish candidate, it would have been a B, so I would not have done a full lot of contracts, that is for sure. Right? But if we go and grab this, what I would have been looking for was, well, first thing is well, what am I looking for? I'm looking for what I should be looking for right now. Can somebody tell me, as I'm looking at this, of course, none of this existed yet. As I'm looking from this first 1-minute candle, what am I looking for? What is the phrase I am looking for? Come on now, you know it. Right, Amos. Good, Robert. Excellent. Good. Now you guys are getting it, right? Yeah, PK came back and said that was great in pop. Yeah, because it actually takes it to a new level. PK, it makes you think about, is this day trade for me or not? All right? All right, I'll help you. I'll help you, but that's all the help you get. And don't worry, those of you that are newer, I'll tell you what it is. Does anybody know it now? Ah, okay. Lumber liquidators. Exactly, Robert. Exactly. Look left. Look left. All right. I didn't realize that, Karen. I will address that for the bullish in a moment. Okay. But look left at the 1 minute. I'm waiting for the break below there if I'm taking the bearish trade. Right. If I'm taking the bearish trade. All right. So that's the combination of pulling them together. So that was, I guess, a bonus on it. That was a bonus on it as far as Kimberly, the bearish component. So let me clear this off. Go to the mouse. You have way too many steps in Zoom to get rid of the drawings. So the question was, where'd it go? I'm looking at the first 6 minutes and why it was not a bullish entry above 33.44. Okay, so we'll go back to Trade Navigator first. We're back on Amazon. We closed down here, right? We closed down here, yesterday, which was nowhere. We opened up here and we broke above. So the question, and I just missed it, so sorry about that, Kimberly. Kimberly's question was really, what about a bullish trade off of that? The first thing is the gap up concerns me, especially when you get to a resistance area. And now let's use our look left skills. And what do you see? Think about it. What's going on? What's up, Doc? How about that? All right. That's it. There it is. Some of you got it. And you guys are right there. It is failing at that resistance level. It is a resistance level. It's selling pressure going on. When you look left, what happened? What happened? Watch. Guys, we made an attempt right here to break, and it did not. We made the same thing right here, and it did not. So now, what is the market maker saying? It's a 3-letter phrase. So remember the look left. That's a 2-letter. What is the 3-letter phrase that the market maker? Yes, Rick. Yes. Here, I'll give it to you. If the mouse will ever come back, there it is. Here, kitty, 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 wham! Right? My fear right here of taking the bullish trade would have been exactly that. Now, if we had a moving average that was up here, I would have felt better about it. Yeah, whack-a-mole. I would have felt better about it, Kimberly, but still not very comfortable to say it's a great trade. But that doesn't mean that there are times I would not take trades like that at all. Mondays are harder because of cost, right? That's a lot of cost on an Amazon option on a Monday versus a Friday. But if we go back and look at the intraday chart, not on the ones, we want to be back on the 5. Really don't want to analyze stuff on a 1. That's just more of a tweak. Help me with whatever I missed. Let's see. So what happened? Did we get a, all right, so you're saying first 6 minutes, so right in here. And that's kind of the point, right? Is we closed right at it, that small move up potentially, but my fear is that big of a move up and all of the look left stuff, Kimberly, is going to cause that here, kitty, kitty. Good catch, Jim. I didn't even think of that. You got a triple top going on there also in the same segue. Roman, I'll paraphrase. How about that? Roman said, looking left today saved my butt or saved my bacon. How about that? Oh, Robert, you're so right. Thank you. Sorry, I'm flipping back and forth. Robert said, I'm talking about this candle here, and that's not it. It's this candle. The 6 minute was here. Kimberly, for me, I need to see a close near this level and a retest. We never got the retest here. So if you were looking at 6 minutes, we never got a signal at the 6 minutes. Three thumbs up from Amos there, Roman. Kimberly, does all of this make sense? Hopefully I didn't run you around in a circle trying to answer your question. That's what you want to know. Cool. All right. If I missed the question, folks, I'm not getting back to see it. I've had way too many, we got hundreds of you in here. I got way too many comments have come through. So drop them back in if I did miss it, if I did miss a question there. But it looks like we're getting to that time. So what stocks do you guys want me to check out? Excuse me. Good, Amos. I appreciate it. I'm glad it was helpful. Rick said whack-a-mole. Right? He had typed in when I was looking at here, kitty, kitty, and I knew exactly where he was going with it. But I saw one yesterday. If you guys remember that whack-a-mole game, the little thing pops up, you got hit with a hammer. I saw somebody with a flat board while you guys are typing your symbols in, and he had a hot dog, and he's pushing the hot dog up through these holes that are in the board, just like you have on whack-a-mole. And there's a dog up there, and the dog is just angry, teeth out, and trying to get it, and he's putting it all over the place. I thought the dog was going to go under the thing and chew him apart, but it was pretty hysterical. Yeah, the dog was too slow. Yeah, the guy was slick. He was moving all over the place. The dog, listen, they're not scanning the whole board. They're looking back to where it just came out, right? So, but it was a good one. All right, so let's see. Karen's asking us for a Tesla. So drop them in, folks. TSLA. Remember, no advice or recommendations. This is all for education here. Let me go ahead and reset my keyboard up. And I'm going to share with you my #1 trading tool that's in my office is right here. You ready? You see it? There we go. A little squeezy ball. That is my stress reliever. Make sure you have something to relieve that stress when trades are not going your way. Holly World, there you go. Yeah, Robert, I probably have this since I started trading. Yeah, I've never replaced it. I mean, it's old, it's worn, but I'm not getting rid of it. All right. So Tesla, we've been pressed. Where are they now? Earnings are $27th. Let's see. Can someone tell me when their earnings are? Are they after or before the market on Tesla? But they are on the 27th. All right. So what's happened here? Let me see. Let me go back. Karen, what's happened here? We bump our head. We finally got the breakout. And look where the run went to today. It burst up above that fib line and ran right to the 100 level, that 900-point level, and failed. And what was our high today? $900.40. So we got above that horizontal line by 40 cents. Great move in there. The question is, could you have taken a day trade or not? Possibly. Right now, look at the difference here, Kimberly. On this one, we had a smaller gap. It really wasn't this massive gap like we did on Amazon. Right? We have broken above before and failed. So you've got that same thing in there, but we had some room that it could actually run for some potential. So I'm looking at this, Karen, still as a earnings, but it's a day trade. That moving average is too high. Options are going to be off the charts as far as pricing goes, more than likely, just with the cost. But we're looking at that 900 level as resistance. And depending on what Tesla comes out with, I mean, we could see that 1,000-point level on their earnings easily. I mean, how big they've become. I think Tesla now is bigger than all the other major US car manufacturers combined, as far as their market cap goes. It's huge. And I'm sure someone typed in the date there of when and time. Toss says it's aftermarket, after, okay, 27 aftermarket. I appreciate it. Thank you, guys and gals. So be careful with Tesla because of the earnings. It's coming out 27 aftermarket, which is Wednesday. If you can get a close above the 863 and you're looking for a short-term trade, definitely back to that 900 without a doubt. I see it can make it there again. So, and if you look at 43, okay. If we look at today and 863. Tesla, snap a line at 863. All right, so we got the breakout. Kimberly, look at this one, right? And certainly I'm not calling on you for any other reason than to use that example from your question. We got a close above here and then a retest and a bounce. See, I like it so much better. It gave me exactly what I needed at that point. Karen said, yeah, Ivy had shot up on, yeah, I bet. I bet. All right, good. We'll take a look, Debbie. Give me a second. I'll get to that one. We've got quite a few in front of you here. All right, so Karen, I hope that was helpful. Let's go ahead and rock on with these things because we are starting to get some good numbers in there. Baidu, and remember, always check the earnings, folks. Don't rely on what I say for earnings. I don't have Baidu down here. I thought I wrote it on this page. I don't. It's got to be coming up soon. Their last one was November, December, February. So we should be okay. February 16th, 15th, somewhere around there, but somewhere before this bar possibly, which is our earnings cutoff. I love the position on Baidu. If we are not sitting at an issue of earnings coming up too soon, well, even if we are, but you got a day trade in there, but I would definitely, I'm sure we would need to split this no matter what and put a Fibs in there. $28, let's see, 44 to 54, 64. Nope, we don't need a Fibs in here. We don't. So I love the where it's sitting right now. I'm looking for the move up to that 270 level. Your stop's going to be somewhere down here about 238 half-ish, 238, somewhere around there. But overall move potential, really nice. Really nice. Hope that helps, PK. Let's see, Larry, I'm hoping it's LMND, or it might be I. Okay, LMND. Oh, lemonade. All right. Just, it may be lemonade, just don't drink the Kool-Aid. All right. And what I mean by that is, you know, there's a lot of hype and hoopla into what's going on with these guys. Be cautious, right? Caution grasshopper. We actually need to redraw the Fibs. And let's see, this one might actually get in the way. Let's see if we can do it and keep it there or not. All right, let's go back to template number 2. All right, so let's see, 149.5 to 159. So call it 50 to 59, about $9 move. We move about $14.50 a day. So you can see the struggle with getting out of this line here today. I like the moving average. We're just a little bit tight on this range right now, Larry. Where we were, you know, if you look at where we were yesterday's close, today's retest and bounce would have put us to target 1 at 158.79. We're out. Target 2, 170. We're out. You already are out of this entire trade today. not only did you get first exit, second exit, depending on the retest that took place at 149.68, not only did you get both, again, depending if it retested to that or not, but you actually would have been stopped out as it came back down through, right? So depending on how this opened up, caution on it. The setup yesterday was perfect. If we can get a close above, then look at that 170 level again. If you come back, I'd like to see the bounce off the 150 back to 159 again. Just make sure you got your targets and your stops preset, because this puppy can get away from you quickly. Let's see. Baidu was 225 after. Appreciate it, Robert. Thank you. All right. I'm trying to manage between the questions and comments that are coming in. So I'm going to hold off. If you guys have additional questions on the positions, I'll come back and grab them after, because there's just too many candidates in here. I'm losing where we are. Brenda, I'm just going to get to Qs and try to give everybody a chance. If we have more time, I'll add the others in. But I know that's the important one for you. So QQQ right now is on a tear. They were, let's see if they're still up. They were up earlier. Nope, we're down to only being up 12 right now. So we were up a lot more earlier today on Qs. So if you got a close right here, Brenda, and a bounce tomorrow, we're looking at that 337, 336 half level. We probably need a fib in there. Yeah, we do. We do. We need to split that in half. But we are, if we get a break down below the 325.89 level, let it get back to the 8 and bounce before trying to recover and take another bullish entry on the position. All right. Sorry about that. That was my trading partner. Just got to see what he's doing. All right. Robert's asking for GameStop. Huh. How far back are you in this one, Robert? Wow, what a move today, huh? It's funny, it almost made it onto my list yesterday for Covered Call Explorer for diagonals, and then I didn't like the way the premiums looked on it and said, you know what? Yeah, we're going to pass. I don't even have an answer for it, Robert. I mean, it's awesome move, but where it goes to, I mean, I'm just at a loss. Let's see, monthly. I mean, and I don't know if today's, did we actually trade at 150 today, or is that just bad data? This is monthly. Let's go back to daily. Amazing. Yeah. Hopefully you've been in this one a while, Robert, just like Plug, right? Plug had a great move, finally settled down a little bit. Option's still a little expensive. I looked at it yesterday. It's still a little expensive, but on Plug, we're looking at 72 as the next upside target. DAR, Darling. It was Darden for a second. Darling International. So I like where it's sitting, Robert. If we get a close above the 8, you got a short-term resistance right up here at that 69 level. I just don't have a great, you get this very meandering position. We don't really have a great place to draw from, right? Look at it. I mean, I can come up with a V down here. And okay, maybe I've got one there, right? And then look at here. Where do you top it out? I mean, we're just like these rolling hills. You know, it's like watching the Waltons or Little House on the Prairie, those big rolling hills. I don't have a good place to draw from. Unless we've got something historical on it, which it doesn't look like we do. Just look at the rectangle forming there, Robin, and use that rectangle as your starting point, right? If you get a breakout from there. Big airplane, Henry's asking for. Okay, so they're stuck right now. They're grounded. How about that, Henry? They're grounded. Oh, okay, look, we opened down. I didn't see that open just yet. So earnings coming up. Be very careful with earnings. We could talk about it more afterwards, but 192 is the downside target we're looking at. If it does break up, we're looking at 113. Roku, Jim is asking for. Hope that was helpful there. Henry, let's see. All right. So I love the fib to fib line, right? 2341. I love that we can get that opportunity in there. When you have a position like this that moves $18 a day, right? And we're looking at 23 to 41, that's 33, that's 10 plus 8. It's about $18. And we well exceeded that today, right? But were there opportunities in there potentially? Absolutely. Depending on what the market was doing, excuse me, and the stock, how it triggered off a key level. But you're looking at 423 and 441, Jim, for right now. PK, is this like a wrestling thing? WWE. It is World Wrestling Entertainment. Okay. So they've got earnings coming up. Caution with the earnings coming out over there. Another one that we really don't have a good place to draw a fib off of. If this is the end of the run and we get another move down tomorrow, then yes, we'll have a place to draw from. But all I can do is start focusing back a little bit. Okay, let me get rid of this. I don't need ABCs. So we've got a nice support about 53.5, and we definitely have some resistance around 64.5, 65.5, somewhere in that range. 65.5 is a better number, right about 65.5. So watch for those levels. 5, okay. After Mike is asking for Intel. All right, guys, if you still have symbols, or if I didn't get to one of yours, or I only did one of yours, drop the other ones in down below. Intel. All right, we definitely have a place to draw our new fib at this point, which takes us from here to here. Let's see. Did we have enough for pullback in here? We had enough pullback in here that we'll draw it from that. That was just a continued breakout and a fail. Another here, kitty. Zero line breakout, right? Failure. It looks like we've got the opportunity between 54.5 and 56.5, but man, it just doesn't have a lot of room. It has a fib of $5, which means it moves $2.50 a day, right? So 54.5, 56.5, that's about $2. So we've got a clear and concise entry in here if we can get a bounce in a bullish market tomorrow, because we're in bullish neutral right now, bias. But I'd be cautious just because of how tight it is. All right. GME high today, 159.18. So it really did get up there, huh? Wow. Okay, so Robert said the last one was KR. But you did type in DAR, correct, Robert, or did I read it wrong? Kroger's, okay. What the heck are they doing today? Did they like divert a truck from another supermarket to them by mistake and give them all this free food? Nice move on Kroger. It's probably not earnings since the last one was here in the beginning of December. So, again, another one, Robert, that we really don't have a place of drawing a fib. It's very much chop. But what I would see is this. That resistance right up in the tops here at about, whatever that is, 36.70. Now, when we bring it back in, ironically, look where we lived, 36.70 and the failure. So a little bit of caution on it. Let's see, FCX. I hope he's trading something good. Okay, no, he's not. Just busting my chops. I love it when someone decides to harass me and tell me how much money they've made today. He knows I'm teaching, and he's doing it on purpose. Let's see, FCX. So we had a nice fib in there, which is long gone. We had this, see, again, we get this nice move up, sideways, and then we finally get a fail. It just becomes difficult to find on some of these stocks, to find good points to draw off of. I mean, that's really what we're looking at. And I'm not a fan of that big of a fib on this price stock. But we're looking at 27 as the downside. I love the confluence at the 28.82. If we can get a fail Tomorrow, a move up and a fail. Look for that 27 as the first downside target. You go, Brenda, with that. Roku. We did Roku, did we not? We did. We did Roku. Oh, took notes. Got it, Jim. Okay. I'm just going down and my eyes are looking for symbols. Oh, you did type it in correctly, Robert? I'm going to go back and check it just to make sure because I don't trust you. Let's see. I looked at Micron today for a potential trade and wasn't happy with the pattern. Bullish. It was on my covered positions. This is one of the candidates from covered call. And okay, Robert, good. So we broke. We're back down into a bullish neutral bias. We need to get back above the 82 with 86 3/4 as resistance if we do. BB, Henry's asking for. Hope that helped, Linda. Ooh. Okay. This is, oh, BlackBerry. Same thing. It's funny. I looked at this the other day. I saw something on the news about it and on CNBC, and they were talking about some unusual options activity on it. And boom. Look at the move. I didn't do anything with it. Just didn't fit what I was looking for at the time. It's a tough call, Henry. I mean, what do you do? It has been like eons since we've been near that. We're up over $20 today. We got to go back just to get to we're about where they were trading. You got to go back to the beginning of 2018. And, if we stretch it back to a weekly chart, granted, I mean, I've traded BlackBerry when it was here, right? But now it's a very tough call. Let's go to a daily chart. It's a very tough call with that move. I would let it settle back in, get a Fibonacci drawn on it, and see if we can get anything off of that. All right, Debbie, GE. All right, so when you look at GE, I mean, they're in a neutral bias right now. They were yesterday, they still are today. 1045 would be a support level for it. I can't draw a fib, it's too low a price. I just won't be able to get enough data points on it. But you're looking at about 1048, 1050 is the downside target. If it violates there, we're probably looking at 8. Let's just look left a little bit more and see if there's anything. 8.5 maybe. But yeah, that's what we're looking for. Since that last drop, that's the only peak we've had in there anywhere. You're welcome there, Mike. FCX. Let's go look. All right. So once again, earnings coming up. Looks like tomorrow. Just confirm them. We broke below the neutral into the neutral bias section. If there were no earnings coming out tomorrow and we close where we were and we can retest the 2882, and if we get a fail, meaning it drops, that's a home run. And for those of you that were in the pop training yesterday, go and check out what letter this would be, right? How does that setup work out for us? Do we have that clear and concise entry that I talked about in there? You've got 281 of, so about a buck and a half a day, 27 to 28 and a half, a buck and a half. We're there. We are there, right? So there's great opportunity if it closes here, and ideally the market would be following along. But remember, you got earnings tomorrow as well. So Jim said Kroger's earnings unconfirmed on March 4th, and Ocado confirmed construction of a new high-tech center in Phoenix to enhance online shopping is the reason for the move. Wow. Okay. I mean, it's amazing how some of these positions are performing right now and how they're moving. It's startling, right? So there we have it. Great training, guys. I hope you got a lot out of it. I hope it was helpful. We held a lot of people in here today, so we're going to get some complaints with people not being able to get in pretty soon. I can see it. Seriously, take a look at power option plays. Amy, can you drop that link back in there again? I know you put it in earlier. Can you drop that back in? Take a look at power option plays, folks. There's a 2-week trial to come in and check it out, right? This tracking sheet right here is the world. What's on this page, this is your trading manifesto. This is your life. This is what you do. You look for this and you take the practice trades off of here. You will learn a system like no other system you've learned anywhere. right? And a system that has proven results. I mean, you can see it in our practice account. We take every trade we call, every trade, even the ones that I tell people I would never take that trade with funded money. Ever, ever, ever would I take it. Why do we take it? Because we said it in class. It's not like, well, but my gut said not to take that. Nope, we called it. You all would have set that trade up before going to work. We're taking the trade. All right, ladies and gentlemen, there you have it. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, folks, you're just one trade away. We'll leave the room open a couple of minutes. Grab the link that Amy just dropped in there, and I will see all of you this week at the rest of the trainings and webinars that we're doing. Take care, folks. See you then. Bye.